And again, thank you for joining us. You don't see our faces today. Normally, Matt and I are good about plastering our faces on the front, but today we need to dive into some education. And those of you that have been on a few webinars with Matt and myself, you understand that we're all about education for you. The way the markets have changed and the way they're changing every day, I feel, and I believe he'll concur when he comes on, you need to plug into some of these master traders. So I wanted to bring one of the best futures traders that I know and let him just talk about basics, talk about why we want to look at futures, and go over some of the things you can look at, because even if you're new to the market, the futures help drive some of the things you do. Even if you're in a 401k, you're in the stock market. You just didn't realize it. So let me tell you just a second how you can find Matt. He is with E-Miss Trades, and I'll let him pull up his website in just a minute, okay? And I'm Lee with Pitt Trades, so we're friends, and we like to get together and make sure we talk about stocks and options, and now we'll talk about futures today. So we're not trying to sell you anything. We just want to make sure that you're educated and that you're part of our trading family. So Matt, you want to talk to them just a few minutes and tell them how you became a futures trader, and let's go from there.
Sure, Lee. I've been, thank you very much, by the way, again, for setting this all up. It's always a pleasure to work with you and professionals like yourself who really do
thank you
trade for a living. And, you know, I think that's important. There's a lot of people out there that are trying to sell you the perfect indicator, the holy grail. And, you know, just real quick and short, I don't think Lee nor myself, I definitely don't, believe in that sort of, you know, behavior. There is no get-rich-quick schemes in life, and there definitely aren't any in trading. It takes a lot of education, it takes a lot of practice, and it takes a lot of continuous learning. I learn every day, and that's why I'm always reaching out to successful traders like Lee and you know, and people that really enjoy their craft and are always looking at it from different angles. So I just want to say that, you know, that is very important. You know, you're never going to find a perfect situation, but what we as traders, I think, try to find is edge, and I do believe in edge. There is no perfect edge. There is no absolute 100% guaranteed way to make money, but there are ways to make money in any type of speculative endeavor if you have patience, discipline, persistence, along with your education and hard work.
Matt, can I interrupt one moment just to ask you, do you mind if people ask questions while you're talking, or do you prefer to have those at certain intervals?
No, I don't mind. I'm more of a Socratic teacher. I prefer to, you know, kind of ask questions of my students and also have them ask of me. I don't claim to know everything about everything. I know a little bit about a little bit. And
that's why we get along, because I do know everything. So that said,
exactly.
Can you guys type your questions in the question box, and I'll try to stop Matt when he comes up for air and put those out. So thank you for answering that. Questions in the question box. Okay, guys? Thank you.
So, you know, as far as futures, I've been in this business of trading for 2 decades, and I got into it probably a little bit more untraditional than most, if some of you don't know. I actually spent a decade in sales and marketing and medical devices. I really always had a passion for markets, so I always had a finger or a leg into the water, so to speak, with markets. But I really had to teach myself and find mentors along the way, late 80s, early 90s. When I started, you know, making money out of school in the medical device business, I would do the traditional. I had friends that were retail brokers, and they'd call and they'd sell me a $5 stock, 1,000 shares. Story always sounded nice, but I'd always watch the stock go to $1, and I'd be like, you know, this just isn't working. So that's where I really got into studying technicals. I understood fundamentals. I was an economics major, and I studied a ton of accounting and finance, and I had my MBA coursework, but none of that matters in the markets. The markets all come down to where are the pain points, where are the people going to get hurt the most. And it doesn't matter whether you're trading stocks, options, or futures. All these things have the same facets, but they all have different mechanics, and that's kind of what Lee and I wanted to talk a little bit about today. So I've traded stocks, I've traded options, I've worked for 2 different hedge funds. I ran my own hedge fund for 4 years, '02 through '06, and since then, for the last 5 years, I've just managed my own book, my own trading. So I'm just a individual trader. I like it that way. I've gone the other people's money route, and I really prefer just to do things my own way and deal with my own book. So that's kind of a little background on me. Why do I like futures? Well, I've got a very active family. I've got 4 kids. I've got a wife of nearly 20 years, and I like being involved in my family. The portfolio business takes a lot of time. And quite frankly, I don't want to be in the portfolio business. I've done that, been there, done that, and it takes too much work for me. But Lee, I would ask you, when you teach your students, when we talked about this, what I look for in futures is no different than what I look for when I traded stocks and when I traded options. I want volatility and I want range.
Correct.
So talk to me about that, because I know you utilize that in your teaching every day. So, for instance, I prefer to trade the S&P 500. It's probably the most liquid futures in the financial marketplace. However, I would say over the last 6 months, it's been less range bound and more tight. Yet oil, the currencies, and the grains, the softs, have been wider in their scale. And again, Lee, what I'm looking to do is I'm not trying to capture absolute tops or bottoms. I'm just trying to surf, whether it's up or down, take a bite out of that sandwich, sometimes with a little crust, sometimes maybe just the middle, the good core piece of that sandwich. And that's all, as a trader, I'm always looking to do. And it doesn't matter whether I'm trading options or futures, how I do that.
I have a few questions for you. And the first one is there an S&P 100 futures, and what would they watch? And how would they watch the 500?
There is not. We're going to talk a little. I'm going to get into this on some of the vehicles that you can trade. And as a matter of fact, if you look on your screen, I'm going to bring out a couple tools here. Bar Chart is a free website. It's fantastic for stocks, ETFs, futures, forex, education. And there's a lot of information, and there's a lot of great stuff if you're just learning in any of these areas to begin with. But let me start with the futures contract, just to give people what, when they talk about futures. Futures are the actual vehicles that actually drive the indices that you see talked about every day. So when they say the Dow is up 100, there is a vehicle, and the symbol typically is YM, and there is a front month. The front month means the current trading month. It's kind of like an option. It does expire. But that future is what actually drives your indices and their prices every day. So the S&P index does not trade. However, the S&P futures does. Is that clear, Lee? Does that make sense?
Yes.
So the indice prices that you see on CNBC and in the newspaper are actually derived. They are derivative of the future. So the futures are the most rudimentary item that you can trade, I believe, in the markets. There is nothing more pure, there is nothing more absolute than a futures contract. Now, a futures contract basically is a legally binding agreement to buy or sell a commodity or financial instrument sometime into the future at a price agreed upon at the time of the trade. So there is a buyer and seller, always. It is an absolute game. While the actual physical delivery of the commodity, whether it's gold, wheat, corn, oats, silver, rarely happens. There is a standardized schedule that needs to be accounted for when you're trading these items. And so we're going to talk a little bit about that and why you need to be aware of what you're trading, when the expiration dates are, and if you don't, roll over. And we usually have about 10 days when this rollover process happens. So very few times are people actually getting delivered a barrel of oil. So this is really not something to concern yourself with, but you need to be aware. And again, education. If you don't understand what you're trading, please don't trade it. Please don't trade it. So the only variable in the in the futures contract is price, and that happens through the trading process, like any other thing, like options, like stocks. So we're going to get into this a little bit, Lee, and we're going to talk about this. So what I've got here on this page on Bar Chart, you go to the futures section, and you'll see futures contract specifications. So right here, right on this front page, we've got this whole list, and it's broken out. I've got the entire list here, but it's broken out by currencies, energies, financials, grains, the indices, which is typically financials, the meats, metals, and softs. And if we look through here, currencies, you'll see the dollar, the pound, the Canadian dollar, yen, and you'll see the trading hours, where they trade, the exchange, the size of the contract, how much money you're actually controlling with one contract. So, for example, if we look at the Japanese yen, you're actually controlling 12,500,000 yen for every contract that you trade in the yen. Okay, so there's huge leverage in futures. But as long as you know this and understand how the leverage can be utilized, it's very beneficial, in my opinion. They're very liquid. Futures, again, are very, very liquid. And I know, Lee, in your world, you guys only trade liquid items.
Correct.
So the thing that I like most about the currency markets is they're entirely liquid. They're available pretty much 24/7. But they do have open market hours. And what you see on this piece right here talks a little bit about that. Now, the currencies pretty much trade 24/7, with the exception of closing Friday and opening Sunday at 3 o'clock here on the West Coast. They're pretty much open 24/7. The S&P futures, if we go down to the financials, just because, again, I think this is the most liquid contract. If you're ever to look at yourself and consider trading futures, the S&P, the E-mini is probably the most liquid contract, and you see that right here. So the S&P trades probably 3 to 6 million contracts a day, and the ES is the mini. There is also a big contract called the S&P, and that trades out of the pit primarily and a little bit in Globex after hours only. And you'll see here that the S&P 500 trades from, and again, these are central hours because this is coming from the CME exchange, this data. But it basically trades every day, Monday through Thursday, from 3:30 to 4:30. It closes for a half an hour, and then it's open basically from 5 p.m. until 3:15, which is 1:15 here on the West Coast, and then it closes for 15 minutes. So it's closed for 15 minutes and then 30 minutes right before the Japanese markets, the Asian markets.
So you're basically saying this is something we trade after the U.S. markets?
Oh, absolutely. Well, it's trading now, and it will close in, let's see, 1 hour again for a half an hour, and then it'll be open again until 1:15 tomorrow for only 15 minutes. So
okay.
It's basically open 23 hours and 15 minutes every day except for Saturday, and then Sunday it opens at 3 o'clock here on the West Coast.
Okay. Thank you.
Okay, but if I were to show you a chart real quick of the ES, and I'll just show you, this is the key point. Open market hours, real U.S. market hours, are 6:30 a.m. to 1:15 p.m. West Coast, or 9:30 to 4:15 on the East Coast. So this, you can see the volume here in the middle, is where the bulk of the trading happens. And each of these bars, the top of this bar right here is, I think, 60,000 contracts, and each one of these bars that we're looking at for scale is a 5-minute bar. So this is a good idea, gives you some context. Today, obviously, we sold out for the first 4.5 hours, 6:30 until 11, and then we rallied, and then we sold off again and basically closed on the lows of the day here in the S&P. So this S&P, when people talk about the SPOOs are selling off or the SPOOs are rallying, this is what leads, whether it's your SPX, your SPY ETFs, they all follow this to a T. So this is your leading, this is the real thing.
So what are you calling a SPOO? Spell that.
SPOO, S-P-O-O.
S-P-O-O.
Just a term for the E-mini, exactly.
Okay. Thank you.
Right. So I'm going to bring back the exchange. So here, Lee, the symbol, when you're looking to trade the SPOO, is the ES.
Okay.
Okay. Now, the other, so I'm not going to go through every one of these, but you can see there are literally 200 items that trade in the futures markets. Again, meats, metals.
Well, are there cycles? I mean, is this what would I stay away from this time of the year, or the S&P would be something I trade all year round, right?
S&P, I trade year-round. I've been trading, again, a lot of gold the last couple of years because, again, of the volatility, the ranges of movements. I've been trading a lot of oil. Oil has gone from 25 to 115 in the last year and a half, so very wide-ranging. Those are things I'm always watching and I'm always trading. I've been trading grains. Grains would be, again, wheat, as we can see here, wheat, corn, soybeans, oil, oats, rice. And there's different products here. I trade primarily the minis, which you see on top, ZW, ZC.
What does the mini mean? What's that mean?
So it's basically 1/5 of a big contract. So to give you an idea, here I'll give you a real quick. I'm going to bring in a chart again.
Okay.
Show you a wheat contract from today. And again, the thing I like about the grains is they're real short market hours. They're only open 7:30 Pacific until 11:15, and all these times are on that chart. I'll bring that back and show you, just so you can see that. So these, although they trade 24/7, they have wider ranges that are closed. Like they're closed right now. They're not trading, and they'll pick up around the Japanese time, around 5 o'clock. So they close for about 6 hours. And then they'll trade until the European Open, and they'll close again before the U.S. Open. So there's every single future has a little bit different time, and you need to know when they trade and when they don't trade. And then the other thing you always want to familiarize yourself with is futures have things called limit up, limit down. So each vehicle has its own. If oil gets up 5%, they will shut the market.
Oh, that's 10%. Good. Mm-hmm.
So. But that means the next day it could gap up again, and you can't get out. So it
doesn't control gaps. It's just during open hours.
Correct. Correct. Exactly. So there can be times where you might be long a position, and the market's going up, but because it's limit up, you can't get out. There's no liquidity. So you need to be aware that is a risk that is involved. It rarely happens in the S&P. It rarely happens in oil. But it happens sometimes in the grain, so I always tell people, be aware of that if you're ever interested in trading the grain markets. As a matter of fact, it's been happening quite often in the last year and a half in the grains. So here's the trading hours. Again, if you go to your bar charts, you can see what exchange, the trading hours, 6 p.m. until 7:15, as I just said, and then it reopens in the morning, 9:30, closes at 1:15. So you can see there's basically 2 blocks of time that these grains trade, and they're a little bit different. The thing about the grains is one contract, and we're basically talking cents again if I bring it in here. If you sold a contract like we did today at $7.96 and you bought it back here at $7.94, you made 2 cents. Each contract pays you 50 cents, $50 a cent. So each contract would pay you $100 on a trade like that. So 5 contracts, you would have made $500.
And how much would I have put out? 794.
Margin-wise, it depends on your broker, but probably would have cost you to each contract somewhere around $500. Not much.
Okay. For each contract, and I would have done, if I'd done 5, I would have made how much?
You would have made $1,000.
Wow. Okay.
In just 2 cents. Now, let me tell you that that wheat actually went down. From there, this was a trade I did. I only took 2 cents out of it. I wanted to be in it, and it actually went down another 17 cents, by the way.
Wow. Okay, this is a good question and pretty much related. I'm trying to keep the questions so that they're related to your topic.
Sure.
Do you short the futures like you do the market? You short it?
Oh, that's a great question, and here is another reason why I love futures. Futures have a bid and an ask. You can sell the bid and buy the ask. There is no borrow. It's what you see is what you get. So it's a true market. It's there may be a spread. It may be $7.94 versus $7.94.50, but that's your spread. It's like Forex in that there is no borrow issues. You can just sell the bid and buy the ask always.
Okay.
I'm a limit trader. It doesn't matter what I trade, whether it's stocks, options, or futures. I only use limit orders pretty much 90% of the time.
I do too. Agreed. Mm-hmm.
Okay. So the next chart, I wanted to you have another question, Lee?
No, I think we're good. I'll go. Some of these are unrelated. I'll come back.
Okay. So I wanted to bring up, we talked a little bit about, let me go back to this just so we can look at this. And I'm just going to point out a few. I'm not going to go through again. There are literally hundreds here on this list. If you were to trade the dollar index, the DX, people are always talking about the dollar. Now, this is not the dollar versus the euro. That's a whole different thing. There are those vehicles also. But if you traded the dollar, for example, again, you can see it's pretty much open 24/7. However, every full point, so if the dollar went from 76.20 to 77.20 and you were long and you bought one contract, the point value here is $1,000. Does that make sense? So one contract, one full dollar, which is a pretty big move on the dollar, would make you $1,000. Now, to give you some perspective, Lee, crude oil, which we trade a lot, and to give you an idea, crude oil today during open market hours was trading in the range 97.80 to 100 spot 20. So about $2.40 was the range today in crude oil, and that's why we like that. That's pretty wide. That's 2.5% move, and that's been pretty typical. One oil contract, again using the same example, if you bought at 98, sold at 99, you made $1,000. Now that moves in 1 cent increments, as you can see here, the tick value. So there actually is 100 ticks for every dollar move in oil. So each tick is worth $10, and one contract, one full dollar move is $1,000. So again, very great leverage again. And typical brokers with an oil contract intraday, if you weren't holding overnight, cost you $1,000 to hold intraday one contract of CL. Okay. Even though you're controlling 42,000 gallons.
Wow.
Okay, that's basically what a barrel amounts to.
And you're sure we don't get delivery on that? I can just no. I'm just being facetious.
Yeah, no. So this is definitely something you have to understand, and I would never recommend people go out and try to trade 20 of these futures contracts tomorrow. Pick one. Pick the S&P. Pick the most liquid, which is the best contract, and know it and learn it well. Here's a schedule, for example. I'm going to show you the indices. Here's the E-mini S&P index. Right now, the front month on the indices happen to have futures contracts that expire every quarter. The quarters are June, September, December, April, and it goes on year after year after year. I typically trade front months. I will do spread trades where I may be long the front, short the back. What that means is I'm long June and I'm short September. I'm trying to pick a middle. And Lee, I know you do a lot of this. So a lot of these type of spread strategies work fantastically, very well with the futures markets. So
here's the question: what day do they normally expire on the front month?
So they expire the second Thursday. So not the third Thursday, but the second Thursday of each month.
All right.
But they actually continue trading until the third Thursday. All right. And wheat, you can see. I just want to point out the differences here, though. But wheat has a totally different schedule. The May contracts just expired the 13th. The July contracts now are trading. They're the front month. But you can still trade September, December, March. So there's a little different. And I wanted to show, again, some of the currencies are pretty much in line with the financials. So those pretty much are rolling over every quarter. So
those are the expiration dates I'm looking at. Was you're pointing your okay? Expiration dates are right there, guys.
Exactly. So this is all on bar charts. Also, this is why this is a great resource. And again, free. Please use it. This stuff you want to know backwards and forwards before you ever enter into a trade. It's not a big deal. Like right now, expiration doesn't even show on our radar because expiration isn't for another 3 weeks when it comes to the S&P, right? So we're just trading it every day.
Do people do a lot of expiration trading like they do in options?
Yeah, they tend to be a little bit more, but again, it all depends. I mean, it all depends on, the flow and what's happening. And again, you're talking about the S&P 500, so it's not Netflix, right? It's not
Yes.
one stock. It's a composite of 500, so it's not as violent as individual stocks can be.
Here's another question. How does news, whether it's global or national, affect futures?
Well, I think news is always important. When the Japanese reactors were melting down, obviously the futures were selling off before anything else. So you'll watch things like the dollar index. If the dollar index goes up, usually stock index futures go down. There's an inverse correlation. Crude oil. If crude is moving up because Obama's talking to the King of Jordan, as he was last week, and he's making affronts towards Israel and going back to 1967, very volatile times. Crude is moving. Crude is moving. So
this says, where can we watch a futures chart? Where can we watch like the dollar or the S&P? Where can we watch that?
Well, you can watch them here. If I click on, here's another. This site is great. Again, most brokers, Thinkorswim, Ameritrade now have futures access. You can turn that on. Just tell your broker I want to turn on quotes to the futures. But you can go here and usually get 20-minute delays. There's a lot of free. If you go to CME, the Chicago Mercantile Exchange, you'll get, and that's the CME group. Again, you'll see right here, they've got all their latest prices here. They're showing me, I've got the corn, wheat, all these up right here. Showing
so could we watch a dollar chart or not? You can't. You can.
Yeah, you can. You can.
Just like a candle chart or a bar chart
Absolutely.
Or whatever we want to watch.
Absolutely.
Okay.
Absolutely. Here is a, here's an oil chart. Doesn't look any different than I'm sure you're used to looking at any of your stock.
The key would be knowing what the symbol is to put in. How would we find out what the symbol is to put into our chart?
Yep. So ES is again ES. ESM is usually the front month. Right now we're in the July, so you want to know where you're trading.
Excellent.
Bear with me one second. I'm going to try to bring that up. So this is where you would see this. Again, all on bar charts. This is showing me exactly. So it would start DX. Right now we're trading the M, which is the June contract. So it would be DXM10. Because that would be, or 11, excuse me. CL would be, we're trading the July, so it's CLN, which is the N month, just like you use in options, right? And that's 11. So we're in the 11th year. But you could, if you wanted to trade 2012, you could definitely do that. The 10-year notes, people were asking, what do I watch? Well, 10-year is another big one that I'm always keeping my eye on. The 10-year note tells me what's going on in the bond world. So these bonds are very important. Real trader, I always say this, I don't mean to be discounting anybody that trades stocks, but the futures markets are where traders trade. And the reason why traders trade futures is tax preferential treatment. It's legal to get, it's basically trading futures has the same capital rules as holding a stock for a year.
That's good to know.
So you get 60% short-term and 40% long-term capital gains. Does that make sense, Lee?
Yes, that's very good to know. I've got a lot of questions coming in, just so you know.
So just to, yeah, and again, we're throwing a lot in here in a short amount of time. But if you make $10,000 trading stocks, and I was trading the SPY, for example, and I made $10,000 trading futures, I would keep more of my money by trading futures than I would have the SPY, and that's why real traders trade the futures.
Is there a limit to the loss, or is that infinitive? If you could put on a trade.
No, it just goes against it. Yeah. Oh, yes. It just. So it would. I would say it this way. It is infinite. It is infinity, just as it is if you're selling options, Lee.
Okay, but you would want to put your stop loss in. I mean, like in Forex, if you don't put a stop loss in, that thing can keep going. So with this one, you would do this. It could keep going, or you better put your stop in. Or like with an option, that's all I can lose.
If you buy an option, correct.
Yeah, correct, right. Yeah, if I put
you sell an option,
$500
you
in a
don't lose it.
contract, well, yeah, but if I buy an option for $500, that's the most I can lose if the trade
That's
goes
correct.
against me. So
In
is that the
futures,
way it is?
if I buy in futures, if I buy the S&P at 1312 and it goes to 1212,
Mm-hmm.
$50 per contract times 100, I lose $5,000.
Okay.
Does that make sense?
Mm-hmm.
100
And obviously
points.
I've got basic
That's not,
questions coming in, like how much does it cost? How much do you have to have? How, you know, I don't know how, if you want to answer some of those, but those type of questions are sitting here.
yeah, you know, again, for me, most brokers will probably open an account for $5,000. I wouldn't probably participate unless I had at least 15 to 25. That's just kind of where I am. But you could open an account tomorrow and trade oil futures for $1,000 if you wanted. But a $1 move would wipe you out on one contract. So you need to recognize, you know, where you are in that scope. Now, if you're trading wheat, again, one contract of wheat, 30 cents is going to be, as you can see here, $50. So $1,500, and we moved 30 cents today in the wheat marketplace. We went from 7.90, or actually we went from 8.04 to 7.77. So 20, you know, we're talking 27 cents. That's the max move today. You could have lost in theory 13.50 if you bought the top and sold the bottom.
Mm-hmm.
Does that make sense?
Yes, it does.
So you absolutely want to give yourself some cushion, and you absolutely, I don't care what you trade. Again, stocks, options, futures, you should always trade with a stop. I put a stop in sometimes before I even put my buy in.
Well, it's like having an exit plan when you put the trade on.
You have to.
Yeah, absolutely, you have to.
And it changes. Now you have to be willing to, you know, adapt. If the trade goes your way, great. If it doesn't go your way, your stop's there and you're out.
Here's a good question along with those, is asking, do you adjust or modify your positions? Do you scale in, scale out?
I will at times, depending if I'm going to, you know, depending on the type of trade. Yep.
Okay.
That's a personal preference. I always tell people, you know, I like to sell into strength and I like to buy weakness. It doesn't matter what I'm trading.
Right.
And I may, you know, for example, today was a good example of that. I actually had orders to sell just a penny or two higher in wheat. I wanted to resell it, and I was being greedy. And I use retracement here. I'll show you real quick just to give you an idea of what we were looking at. So I sold this morning. You can see I sold at $7.96. I bought it at $7.94. I drew my fibs then, because this is the open market, from the top to the bottom. And usually I'll sell one at 50%, two times whatever my 1 and 2 are. It could be 1 or 10 or 20, it doesn't matter. But usually I'll sell one here at 7.97 and a quarter, and 2 times here, which might have been, again, 5 contracts, 10 contracts, whatever, it doesn't matter. And I didn't put my 1 in here, and we hit it. I mean, you can see this perfectly, Lee. We hit the 50% retrace and rolled right over.
Absolutely.
But that's trading. Sometimes you try to be cute and say, hey, I'll just wait for the 61.8 today because I'm tired of, I want to get a higher price, right? Well, my cuteness cost me, I mean, at least, one contract take me down, another 20 cents, which one contract there would have made me another $1,000 today.
Okay, and here's a question along with that. Is it called a car instead of a contract or a lot?
Yeah, cars, lots, contracts, all the same.
Okay. Do they use cards? When you go onto the floor, sometimes the guys will drop their cards.
So they basically call it car's the big, if you will. Remember we were talking about the smalls and the bigs? Yes. So if we look down here, and I go down to the financials and the indices, here's the E-mini. The E-mini is just 1/5 of a car, which is one contract of the big. So when these things first started trading in the 80s, you had only the big. You only had the S&P. So you had to put up, for example, usually, and the margin on the S&Ps are much bigger than a lot of these other products. So it's also a good reason to trade them because, you might have to put up for each contract $5,000 or $6,000 for each E-mini.
Oh, wow.
It's hard to get over your head. I mean, but intraday, that's not true. Intraday, it's about $12.50. But if you want to hold it overnight,
yes,
depending on the broker. Again, every broker's got different. Don't put yourself in a situation where you're over leveraging, you're over, because these are leveraged products. You don't need to be big to make money.
Well, I have two more questions that I want to ask you. One is, are overnight holds dangerous and advised? We're not going to give advice here today. We'll just do education. But are overnight holds dangerous?
Well, it doesn't happen overnight. It'll usually happen. So in every vehicle, if you go to the CME, they'll tell you where they will stop trading. So again, it might be 8% on the grain market. It might be 10% on the oil
Do you close
market.
your position at the end of the day, or do you ever hold something?
If you didn't get out before you got to that point, then you can't do anything. Nobody can do anything
Okay.
until they open the market. So it's dangerous in the fact that you can't get out, whether it's going your way. Even if it's going your way, you can't get out.
Either way, there's no way out. Okay, here's another question. I'm familiar with form of a novice.
But again, it's rare that it happens.
Okay. Okay. But but it's rare. Okay.
It's there, yeah.
Okay. Let me ask you this question. I'm going to just read it the way it's written. I'm familiar with form of a from novice perspective, how to trade using one standard deviation in options. Does this follow with futures as well?
Yeah. I mean, everything has its range.
It's all math. It's all math.
Yeah. It's all math. Exactly. I mean, I trade. Now there's a little different lifeblood in futures than there is in stocks, but every stock is different from every stock. They all breathe a little differently. For example, today, again, your biggest movers, silver was up $1, right? And this is just a heat map chart, and lean hogs were down $1.67. So, what do I want to trade? Well, silver was, definitely wide ranging today. I want to trade silver. But it hadn't been for the last, it had been consolidating, so you were waiting for a breakout one way or another. But the thing I will say about silver, when you look at things like this, it's the same thing you look at. So the reason why people were getting, smoked in silver over the last few weeks when it was diving down, not only was it diving down, but they were expanding the margins. Yes. And silver, just so you know, silver went from almost 50 down to 33, 32.
Yep.
So it's called $17. One contract, one silver contract, Lee, is worth $5,000 per dollar. Move. So one contract that you were long at 50, you watch that go to 40, you just lost 50 grand.
Goodness gracious. Yes, you better know what you're doing.
So you just need to know this point value right here for everything that you trade.
Well, let me ask you this. The people that trade with you, because you have a group that pretty much trade with you, and I know you put triggers out and things like that, how much time do they have when you put out an alert? How much time do they have to actually enter a trade? Does it move too fast for them? Or how do you do that?
Again, I'm a limit trader today. I put an order. I usually use, if I'm using limit buys or sells, and I'm using buy stops or sell stops.
So the trade has to come to you. Basically, that's what I say. Yeah.
I'm always waiting for the trade to come to me.
Okay.
I'm always waiting. Yeah. I don't use market orders.
Okay. So basically, you would send out, if I'm trading with you, you'd send out an alert, and I would see it come. I'm just asking how this works. Would it come to me, and then I look at it and?
Yeah, we use Twitter. We have a private Twitter feed, and it just says, buy the ES at 1312, stop at 1308, one lot. And one lot for me could be 10 lot, but whatever one lot is for you, that's one lot. And you know that stopping on 4 points on the ES per contract is $50, so you're risking $200 on the trade.
Okay. And so you wouldn't send out alerts because you just said you don't trade those. You don't trade late at night. You pretty much trade what hours?
I'm an open market hours guy, and sometimes I will hold positions overnight, but you'll know. Okay. Like right now I have absolutely no positions overnight, and I traded wheat and oil intraday today, and that was it. I didn't do any ES trades.
Okay, here's a good question. How often can you trade the same car a day? Like for a trader, you can trade.
There's no day trading rules on futures.
Okay. Why is there no day trading rules?
Because it's a trader's market. So you could. That's why, in theory, you could trade. You could scalp the ES 100 times in and out for a tick. A tick being a quarter point on one contract is $12.50. So you could trade that thing 100 times between what now and it's open right now. The last trade we have is right right here. So.
Okay. Here's another question: can futures trade?
I don't scalp though.
Oh, you don't scalp. Okay. This is another good question. Can futures trade through stops the way stocks do, and you miss getting your stop?
No.
Getting stopped out.
It's a market order on a stop.
So you don't get skipped over.
It's a market order.
Okay.
If it hits your price, your order goes. Now, it might not be right at that price. It might be better. It might be worse.
Okay. All right.
So if it's a fast-moving market,
then that's no different than anything else. If it's,
exactly.
when it's been hit, it's hit. It may not get us where we had our stop if it's moving down or up or whatever. Yeah. Okay.
No, but it's usually within a tick or two.
Within a tick or two. That's a good answer right there.
Yeah, because it's so liquid. I mean, again, every bar that you're looking at in this 5-minute chart is 50,000 contracts. So you're trading. This is just huge volume.
And the slower times are what? The slower times?
Well, we're in slower times right now. I mean, just like any markets, Memorial Day through, again, as the calendar turns, Memorial Day through Labor Day, August is really slow in all markets. Crude is always, there's always something interesting going on in the world that affects crude, right? And now with commodities and the dollar policy that our country has in play, I mean, this is the thing. You've got commodities, you had wheat today in a 3% range. That's wide.
3% is a wide range for futures?
Or
for just wheat?
It's wide for wheat. That means that, for example, 3% in the S&P would be a great day also, Lee, because that would be 40 points.
Yes, it would.
So to me, anything in the futures world, and again, because of the leverage, one contract 3% on a wheat, we're talking a 25% or 25-cent move is one contract. That total move is $1,250. So
right.
Yeah, that's great.
I have 2 more questions. Are there demo accounts for futures?
Yes.
Okay.
And I highly recommend it.
Okay. And are there wash sales in futures?
No. Again, that's why traders trade them. They don't. Here's what happens at the end of the year. My futures account, I get a 1099. It just says I made $100,000, and I turn that in. I don't have to recap anything for the government. I turn in that sheet. It's one entry, and I'm done.
That's sweet.
It is sweet. And I get tax preferential treatment.
Very, very nice. Okay, it's 5:44, and so I want to. I'm cognizant of our time. I have one more question that we'll take. Actually, I see 2 more. We'll take those quickly, and then Matt, I want you to point them in whatever details or something that you want them to look at to give them some homework.
Okay. Sure.
Since this is a trader's market, you're basically trading against experienced traders. So you bet. Oh, this is more of a comment. So you better be confident to trade against such a bunch. And I agree. You're walking onto the trading floor with people like Matt. You better know what you're doing.
But as a technical trader, I believe that's true in anything you trade, Lee. Whether you're trading futures, stocks, or options, there's people way smarter and have way more resources than the individual. So the reason why I prefer futures is, yes, there are professionals, but it's also like playing at a blackjack table with $25,000 a hand. I know how they should behave, and if they're not behaving, it's usually in liquid times of the market. And I'm not playing. I don't play overnight. I don't want to trade 24/7. That is not my goal. So I want to play in that sweet spot at the blackjack tables, $25,000, 9 p.m. until midnight. That's when the big money is coming in. And that's when they're going to take hits up to 15 against the dealer 17. I don't want to play against the drunk guy from Topeka and Granny Mississauga, Ontario, who's going to win.
Right.
She's going to win, but she's
Yeah.
going to blow it for everybody else.
That's why I said, guys, I don't want to trade against you. No offense, but I want to trade with, I don't want to go when the band's playing. One last question.
Well, yeah, that's how you trade options too. You want to trade in that first hour, last hour, the middle of the day. I tell our members every day, I'm going to lunch, and here I'll show you real quick where that is. You can see this every day. It doesn't matter. The ES has these bookends. You see this, Lee? Let me just show you real quick. I'll show you real quick.
Yep. Let's make it clear. Okay.
Here's our first hour.
Uh-huh.
And here is our last hour.
Oh, yes. Absolutely.
The volume. And then everything else, sleepy time, 9 to 11 every day. I don't play. I do not put on any trades between unless
While
I'm
you're
in a
asleep.
trade.
While you're asleep, you don't put on any trades. Okay, we got that.
No, but right here.
Yeah, I see it.
Here's the 2-hour break. You see it in the price too. This is like a 2-point range. Every day we see this. Doesn't matter what the market's doing. Rare that this moves. You can see what happens. Everybody leaves. Everybody goes to lunch. They all go see their kids, do their, get a big fat lunch, and they come back from siesta. Then
we're traders for the lifestyle. That's what I try to teach. We're traders for the lifestyle. We don't want a job. We're traders for the lifestyle. One last question from Charlie, who says, with margin, do you end up using your buying power with many trades?
Well, my answer is, do you use it up for stock trades?
Yes. So our buying power is dependent. It varies by individual, obviously, but that's a good question. I mean, it's not just walk in and have it. Yep.
Yeah, it depends on the vehicle, depends on how much money you have, and it depends on what you're trading. But for example, if you have a $100,000 account, you could probably day trade safely. Not that you would want to, but you could day trade 70 contracts, 100 contracts at one time.
Okay, wow. Someone's asking if you've ever traded options. I know the answer, but I want you to.
Yes, I've traded options, and I've traded options on futures. That's a whole other story. Advanced class 214.
Which I love options on futures. That's my thing. I'm an options gal, so.
Yeah. They're options on futures. Again, liquidity. You got to find whatever's liquid there, and I would stick with S&P, and I would stick with oil. I would not get into options on futures when it comes to silver and wheat. It's too dangerous unless you're spreading. You got to be spreading that.
The question from Faye is, do funds settle the next day?
Yes.
Okay.
Usually at close.
At close?
Most brokers, yes. So, like, for example, a lot of brokers, here's a good example. Since we close on the ES at 1:15 here on the West Coast, and then they reopen 15 minutes, a lot of people will just say, you know what, I'm not going to, because the way the brokers work is to carry an overnight, it might cost you $6,000 to carry that one ES contract, but to carry an intraday, it's only $1,000. So what a lot of people will do is they'll say, well, I'm up a little bit, so I'm going to take my profits here, take my 4 points of profits on my one contract, take my $200, take my chances that in that 15 minutes the S&P isn't going to gap today. I don't think there's any news that's going to make it gap. And I'll rebuy or I'll resell and get that position back and use that intraday margin even though it's a new day. Does that make sense? Right. Mm-hmm. But you have to talk to your broker about that. It's broker dependent.
We need to clear this up. Someone says they don't see your trades on your Twitter feed, and that is a private Twitter feed, I believe, right, Matt? They don't see that on your regular Twitter feed.
No, you won't see my trades on the. If you want to join our service, Lee, I'll do a shameless.
Yeah, show us. Mm-hmm.
emistrade.com. That's where you sign up. We have a Twitter fee, $200 a month, or you can pay up front and get it for basically a half year's fee. One trade, obviously, again, you make today one oil trade made you about $1,550 or $1,500 on one contract. So that paid for a year and change of our service if you buy it up front for $1,200. Basically, you pay for a half year up front, you get the full year.
Excellent.
And that's it.
Anything else you want them to know? So that,
we also do one-on-one education. I don't.
Where is
here
that?
At our office.
Where's your
I'm in
education?
Bend,
Okay.
I'm in Bend, Oregon. I always encourage you, if you want to come for a day, if you want to come for a week, come on out, we'll sit here and talk like this for as long as you want to talk, all day. I'll take you golfing, I'll take you canoeing, fishing, whatever you want to do.
And I know where this question's coming from, but you don't want to trade starter accounts in futures, guys. You're not going to go in with $500 and $1,000
No.
for futures. It's not the
Again,
market.
I always suggest minimum 15, 25. I've seen people succeed with 5, but that's just me. I like to be a little bit more conservative.
Yeah, okay. That sounds great. And you want to put your email up there, or what's the best way for them to contact you with further questions? Through Twitter or where?
Yep, either way, you can contact me directly. If you go to eMistrade, you'll have our contact there, my assistant, Carrie. Or you can email me directly, misstrade@gmail.com.
There's your picture right there. Guys, I apologize when you signed up for your webinar. I don't know why my picture was bigger than Matt's. I told him earlier it was because my mouth is probably bigger, but I'm sorry.
Well, and again, I've been receding hairline since I was 18, and you've got that great hair, so.
Oh, well, if we've got the big hair, we're always going to win. Okay, well, Matt, thank you so much. We do have this recorded, guys, and Matt and I will coordinate back and forth and give you a recast link. He'll have access to it. I'll have access to it. Again, this is all about education today. And, we're here. If you have anything, shoot us a Twitter note and let us know, what topics you'd like to see, and we'll try to do another one. Matt, as always,
yeah.
I appreciate you so very much. You're a good friend.
Likewise.
Thank
Likewise.
you.
You also. Thank you.
And lots of thank yous coming in, and we appreciate you guys for attending. I'm going to sign out now, and Matt, you enjoy the rest of your afternoon, okay?
Thanks, Lee. We'll talk tomorrow.
You bet. Bye-bye.